All right, hi everybody, welcome back to another video in which I briefly want to talk about my current portfolio. I recently posted a post on my community tab on YouTube, asked people for topics to cover. And one user, whose name I can hardly pronounce, I'll just display it on screen, he asked, well, your current portfolio and the stocks on your watch list. Well, what I will do is I'll go through my portfolio here, one stock after another, starting with the smallest position. As of today, we have Saturday, the 18th of October, so this may always change. Just this week, there were quite a few transactions that changed the overall portfolio composition. What I maybe could also say is that, first of all, there was quite a lot of turnover this year in my portfolio, certainly more turnover than in previous years. This was partly driven by me adjusting the portfolio according to opportunity cost factors, primarily me seeing higher expected future returns in securities that I added to my portfolio as opposed to the more established ones that were in my portfolio. There were a couple of positions that have done decently well for me over the last 2, 3, 4 years, and some of them exited the position as a result of that, because part of that performance was driven by a slight re-rating in the multiple, and the other portion of the performance was, of course, driven by an increase in the profit power of each individual business. What's maybe also noteworthy is the composition of my portfolio in terms of geographic exposure, which of course would require maybe a little more nuanced discussion than me just displaying a pie chart on screen right here, because not only the headquarter of a company matters here, but also the diversification of an individual company in terms of where their revenue is generated. Just to provide one example here, I added InPost as a new position to my portfolio this week, and while it is a Polish company that also generates around half of its revenue in Poland, the remaining half is generated internationally, primarily in the UK and France, some other international markets and European markets in particular on top of that. So, well, this example already illustrates that some companies, and InPost might not even be the best example. If we think of Wix, for instance, I would have to double check. Wix is no longer in my portfolio, but that's the first one that came to my mind. It's a truly global company, and I'm pretty sure that the geographic revenue diversification of that company is quite high, with the majority probably generated in the US, but I'm not even sure about that. I would have to double check that. But as you can see, the US is now only sitting at, I need to open it here myself, it's only sitting at a weight of around 14.5%. And that's probably pretty much only in active brokers. The majority of my portfolio is now invested in UK companies, and that's namely two. That's Ashtead Technology and Wise. The UK now makes up 34% of the portfolio in terms of, well, as I said multiple times now, the geographic weight in my portfolio. We've got Singapore with around 9 to 10%. I think the Luxembourg here, I think that's a misattribution on Coifins, and actually I think that's InPost, which is, as I said, a Polish company listed in Amsterdam. We have Norway, Germany, Sweden, so lots of European names, and a little bit of Canada exposure with around 4.5%, and Japan with 3.8%. So maybe we start with Japan, because that is also a relatively new position added to the portfolio, and that's a company called Timee. What I will do here is, first of all, everything here is not investment advice. I'm just going to talk about sort of in a diary style about my portfolio here. I'm not going to give you like a pitch. At least that's not my intention here. I'm just going to describe, well, what my thinking here is, what the companies briefly do. And what I should say is that for pretty much all the companies in my portfolio, you can now find a deep dive on my blog in which I go really, really deep into each individual company. The post on InPost, for instance, no pun intended, was almost 28,000 words long. And I'm not claiming that long is necessarily better. In each post, I also have like one short section where I try to nail down the thesis to sort of a 90-second pitch. I call this the bam, 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 bam pitch. So 5 reasons for why that stock might be attractive right here. But what I'm trying to say is that I cover a lot of nuance in these posts, and obviously I can't do that when I just run through my portfolio in maybe a 10 to 15 minute video. So Timee, Japanese company, around a 1 billion market cap company, by now. I think it was 900 million when I bought it. It's basically a marketplace for spot work, which is sort of a cultural phenomenon or something you don't see in all geographies in that shape and form. So basically it's connecting employers and employees, and many of the employees, they are basically looking for doing an extra shift here and there to earn some additional money. They are the clear leader in that space. They basically invented that category. I think their market share is around 70 to 80%, if I remember correctly. Again, I would have to double check. I do this quite freely off the top of my head. Didn't prepare anything for that for this video except for pulling up the pie chart here. So clear leader here, quite attractive economics, super high gross margins, if I remember correctly, 94% gross margins in the most recent quarter. And some room for further margin expansion, also further down on the income statement. So in terms of EBIT margins and free cash flow margins down the line, of course, as well. All right, then next up on the list, we have Computer Modeling Group, an investment that hasn't done so well for me this year. It's probably down 20-30% from my purchase price, which I think was around maybe in the range of $7.50 Canadian dollars to $8 per share. I think right now it's trading, might actually be down more. I think it's now trading below $6 a share, Canadian dollars. This is one of two companies with oil exposure, is how I would describe it, although not a direct commodity play, if that makes any sense. So Computer Modeling Group is basically offering software solutions for the oil extraction business. And yeah, they're all related business, and I'm going to jump ahead here a little bit, which is the second biggest position in my portfolio is Ashtead Technology, which is more asset heavy, if you want to call it like that. It's not a software solution. What they do is they rent out equipment for the oil and gas and generally also the energy sector. So around 1/3, they are quite flexible in that 1/3 of their rental equipment can also be used for the renewable energy sector, which is quite interesting. So they are very flexible, not only in terms of in which business lines their equipment can be used, but also geographically. They are able to shift their rental fleet quite dynamically and quite quickly, which gives them a lot of, flexibility here, the ability to adjust for various demand requirements from their customers. And this is actually also quite an attractive business, I should say. I didn't expect that when I first was pitched the idea, and I thought, asset heavy business, how can this be so attractive? But if you look at other rental equipment companies like Ashtead Group, for instance, they actually have quite attractive unit economics, and generally it's actually quite an attractive business to be involved in. And I would have to check, but gross margins actually quite high in that business too. I think above 70%, but please double check that I do that as said off the top of my head. Okay, looking back at my list, again, I think I have to keep it a little shorter here. We have Edenred as a French company. We have Evolution Gaming, which I feel like most people are probably familiar with. Both positions with a relatively small weight. We have Brockhaus Technologies, which I would argue is the investment in my portfolio with the most hair on it. I've covered the developments this year. I've bought it in April this year, I think, if I'm not mistaken. So it's not like this position has been in my portfolio for a very long time. But even in that short time span, call it half a year, there have been plenty of events that changed the thesis positively or negatively here and there. Actually trimmed Brockhaus quite recently to build that position in InPost. Now that I mentioned InPost, let me just describe what InPost is doing. InPost is basically a logistics company based in Poland that for the most part, they have other solutions as well, but for the most part, they run a network of lockers for parcels, so-called APMs, which stands for automated package machines. And again, maybe similar to Ashtead Technology, at first glance, you might be tempted to say that this is probably not a very good business, not a very attractive industry to be involved in. Because if you look at some of the other logistics players, the incumbents, the legacy behemoth here, if you want to call them like that, DHL, DPD, FedEx, those might be the first ones that come to your mind. They actually don't have that attractive unit economics. So I think all of the names I just mentioned, they run businesses that generate single-digit free cash flow margins. And InPost, on the Polish side, where it's the most mature in terms of where it is in its business life cycle, there they actually post north of 30% EBIT margins. So way more favorable unit economics for InPost here. Again, founder-led. Let me just walk through, double check which company is actually founder-led. So Wise is Ashtead Technology. It's not. IBKR is sort of still led by the founder. And then we have Tiger Brokers, which is also founder-led. We have InPost, which is founder-led. Solaris, which is founder-led. So lots of founder-led businesses here. Brockhaus is. Evolution Gaming is not. Edenred is not. Computer Modeling Group is not. And Timee it is. So I think it's 11 positions in total, and maybe 6 or 7 of these positions actually still led by the founder, which is always something I like to see, because it aligns the incentives of the founder with my incentives as a long-term shareholder in these businesses. Yeah, maybe you have some questions. I guess I'll call it a day here to make sure the video doesn't get too long. As I said, you can find pitches for all of the stocks. Maybe I shouldn't say pitches, because it really depends on the entry price as well. But analyses for all of the stocks on my blog. If you have any questions, I'm happy to have a discussion in the comments down below. Enjoy your weekend, and we'll talk soon.